Hello and welcome to another update video about Ethereum. The Ethereum chart is still unchanged. I've made a few changes to Fibonacci support and tried to make the chart a little bit clearer. We take a look at the movement from the Friday, the 5th of July low. But maybe we zoom out just briefly to get everybody on the same page, because the idea is that this is bullish, a bullish chart, bullish price action. Bitcoin seems a little bit more clearly bullish, yeah, because this here is a bit of a mess. Price action that happened between, well, middle of March and now. There are a couple of ways how this can be interpreted. One way is that this is an Elliott wave triangle, A wave, B wave, C wave, D wave, and a higher low in wave E is still something that could happen before we break out to the upside. Another way of looking at this is as a normal A, B, C structure, and the wave 4 bottomed here. Then the correction looks somewhat incomplete, but it's possible to interpret this as a 1-2 setup, and we would go from there. In both scenarios, however, bullish, as long as the 2,956 support level is holding. Can I predict the price will test that level? No, and I won't. Okay, I won't. All I can say is the yellow box is really what matters to determine if the chart is bullish or not. I've reduced the size of the box because I've added another Fibonacci, let's say support area for an internal fourth wave. Okay, let me explain. This is basically unchanged from before, where I said to you we could get one more upside extension. Looking at the microstructure, however, it seems more and more likely we get one more extension here on this chart, because the price has really not gone down much. And it's very, very choppy price action, but very sideways oriented. So from the 5th of July low, we probably saw wave 1, wave 2, wave 3. You might recall that I said this wave 4 was quite shallow, and we really need a break below the red line to get some indication that a top of sorts has formed. Looking at the chart again, doing some work with the fib levels, that would still not be enough really to confirm wave 2 has started, because it could just be a larger 4. So A wave down, B wave up, C wave down in wave 4, and one more high in wave 5. Also, please remember, or you might remember actually if you watched previous videos, but it's important to note that we haven't got reliable 5 waves up yet. So it could be 5 waves visually, yes, as highlighted here with a top on the 22nd of July, but we never reached the box, the upper target box. Bitcoin only did the minimum. So I think Ether could stretch higher once more from here, and it is possible to get that one more extension. I find that quite likely. Actually, it would be better, okay? And it is what I wrote in one of the signals earlier today to our gold members. What did I say? The message has not changed, but I've changed some micro support levels. The price could still form one more upside extension. Remember that Ethereum has never reached minimum expectations for a 5th wave in terms of Fibonacci targets. So for a 5-wave move, one more high is needed. Okay, and there's some more stuff in there, but this is basically the message, that one more high is needed for a 5-wave move. The difficulty on this chart is, though, because we could be in an Elliott wave triangle, it might be that we only get 3 waves up. But you have the range to work with. I would see this as a range. The price, if the price pulls back, the more it pulls back while holding support, the better the reward to risk ratio. Obviously, needless to say, there isn't much of a pullback at the moment. While this could form a head and shoulders pattern here, as long as we are, holding, especially here the red line, I mean, that's at least structural support, and it is at 3,350. One more high is, I think, very likely, okay? And I wouldn't be surprised to see that maybe today or tomorrow. And one more upside extension would take the price still to 3,660. That really hasn't changed, or a little bit higher. So I think we should be watching for that. The Fibonacci target area here, well, let's say Fibonacci extension area, it just gives us the typical extensions for a C wave. The microstructure is really unreliable here. There's no point counting that. It will give you a false sense of security. It's possible the C wave even bottomed already, that C wave, because we reached the 100% extension already. But the thing is, in a C wave flat correction, technically speaking, we could see prices all the way down to 3,170. Now you might say that is a lot. That's why I say, this is a range. The reason why I'm adding the 2.618 extension is if I add the Fibonacci support levels for a fourth wave, well, guess what? It takes us down to 3,155 even. So it is going to take a while before we can really say it's the wave 2 or wave 4. One more extension makes it clear, then I would call that wave 5 of 1, clearly. And only then afterwards the wave 2 pullback is set to start. I hope that makes sense. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.